You're all watching me. So the tweet with the best possible theory of how I did this weekend wins a prize.
Drunk.
Keep it clean, ladies and gentlemen, keep it clean.
I think drunk is the answer.
I think you're probably right. But there's a little bit more to the story than that. So, my name is Solitaire Townsend. Please call me Soli. I'm the co-founder of Futerra, and I am so pleased to have this amazing panel with us today to talk about the value of purpose. And those are two really interesting words, purpose and value. The value of values is something which we might talk about. The purpose of value, perhaps, in terms of the purpose of a company. So how many people here work for a company that is registered or incorporated in the UK? How many of you are registered or incorporated in the UK? Wonderful. And how many of you know what the purpose of your company is in your articles of association? Slightly fewer. So your articles of association are the basic legal document that sets out the purpose of your company. Not what's written on your mission statement, not what's written on your website, but the first line of your articles of association in the UK, if you're a limited company, states, the purpose of our business is to produce returns for our shareholders. So technically, if you haven't changed that, that is your purpose of your company. Everything else that you may have changed on top of that is, shall we say, optional purposes. Your legal purpose is to make a profit. And as Futerra, we hacked into that when we became a B Corp, and we said that the purpose of our company is to fulfill its mission, which means we still love making profit, but it happens to be optional for us, whereas now the legal obligation of our company is to fulfill our mission. So I just wanted to raise that, because sometimes when we talk about purpose, we can end up in a very emotive conversation, and rightly so. Purpose is emotive. The very word of it, what's your purpose, is emotive. But I like to think of it in two sides, the left brain and the right brain thinking of purpose. So our left brains are logical, they're analytical, they think about architecture, returns, they think about costs and benefits, our system one as we would have it. And that logical part of purpose is sometimes overlooked. The rules, the definitions, the obligations, the architecture, the incentives, the disincentives around purpose. And then we have the right brain side of us, our creative, our magical, our emotional sides, our sides that will connect with each other. And when it comes to purpose, that's often how we talk about brand purpose, around how can we catalyze and enthuse, how can we engage and change, how can we connect with people around our purpose. And what I would argue is that we need both. That if you just have your logical purpose, your legal reason to make a difference in the world, that's going to be great, but it might not bring anyone with you. And if you just have the right-hand side, if you just have your right brain, creative side of purpose, then bluntly you might be doing greenwash, which, by the way, is our version of fake news when you work in sustainability. We had that terminology way before Trump did. So, to begin with that idea of the logic and the magic of purpose, I'm so excited that we have Garaldine Matchett, who is a CFO, and to have a Chief Financial Officer here with us to discuss purpose and the value of purpose is a real privilege, and rarely do we hear from CFOs on purpose. So I'm going to come to you first, and then I'm going to come to Keith and to Justin afterwards. So, Garaldine, would you mind introducing yourself and just opening with a few words about perhaps the logic of purpose?
Absolutely. Good evening, everyone. You can't imagine how happy I am to be in the middle of the City of London, particularly in this building linked to insurance industry, and to have a full house in July on purpose. That makes me feel a lot more enthusiastic that we're getting somewhere. Maybe a couple of words about myself, just so that you know who I am. One could define me as a classically trained CFO. So I did my schooling in the Big Four accounting firms, amongst others, here in the city. And have been Chief Financial Officer of 2 global listed corporations over the last 7 years, one being SGS, the service company, and the other one being Royal DSM that I'm also representing this evening. On the other hand, I have been described as a bit of a maverick CFO because in most countries, CFOs don't have a degree in geography or a master's in sustainable development from Cambridge University. And they look at me and go, oh, you didn't do MBAs in economics, etc. I said, no. So that's, you can imagine that my heart is already convinced that sustainability and finance belong together. Now I'm just trying to prove it as the years go by. So that's a little bit who I am. As for Royal DSM, a couple of quick introductory words, because you probably or may not have heard about our company. It's a life science, material science listed Dutch corporation, important Dutch corporation, that has evolved from being the Dutch state mines, which was actually coal mining more than 100 years ago, to being today a biotech material and life science company. So we produce nutritional ingredients for humans and for animals, as well as specialty materials that go into mobile phones, into making cars lighter, etc. And as you will discover through the conversation, we endeavor to basically make science make the world a better place. And our philosophy, and it's embedded in our mission and our purpose, is bright science for brighter living for today and generations in the future. And that is what drives us. Now, as a Dutch corporation, it's maybe important to highlight that we are legally bound to take into account the interests of all stakeholders, which, by the way, is helpful sometimes in explaining, and we may drift into that domain at some stage. So that's really the background. Now, as to finance, I would like to deviate a little bit from what I was originally going to say, but I'll say very shortly. A lot of work, as I understand you're all interested in the subject and probably know, a lot of work has been done over the last few years to try and quantify natural capital, social and human capital, do integrated reporting, and try and at least have, and you saw some of the slides up there, the data available. And this is making progress, and whether it be through the WBCSD or for accounting for sustainability with the Prince of Wales, a lot of work is happening and it's getting there. However, and that's probably my big however for tonight, are the capital markets ready to listen? And being a CFO of listed companies, 100% free float, I do a lot of roadshows. And I have to tell you, quite honestly, that London has been the hardest nut to crack. In most other capital markets, we can talk about purpose. There is an audience, and it is at least perceived by corporates going around as having part of the decision-making process being attached to it, be it sustainability related or bigger purpose, etc., and values. Here, it has been a tough one. It's very much, very much quarterly, short-term, etc. But I believe there is light at the end of the tunnel. One of the most, in my view, influential moment actually happened in London, and that's Mark Carney, who, by spelling out the systemic risk related to climate change and by initiating the task force on climate disclosure, has created an environment where suddenly the spotlight is not only on the corporates, and we will still have to do our part, but is also and majorly on the asset owners. And that's why I made reference to the insurance industries. As you know, pension funds and insurance companies are by far the biggest institutional shareholders. If they are to continue to manage long-term liabilities with extremely short-term thinking on the asset side, it's going to be an issue. Now, the Stability Board, by asking the question, how much is your portfolio at risk, has created space for a dialogue. So we still have a big gap. There's still a lot of how are we going to do this? How are we going to do the scenario thinking? How are we going to actually measure a world of 4 degrees, 2 degrees, etc.? But at least the conversation is happening. So I will stand here, I'll sit here, and answer 3 of the questions that were in the event descriptions and that you'll be debating. Do I believe that value or purpose equals profit? Absolutely. Do I think that corporate value can exist without corporate values? Absolutely not. And do I believe that all corporations should be party to de-risking the political process? Absolutely. And as an example, Royal DSM was one of the signatories in the Paris Agreement in COP21 of the CEOs actually advocating for a price on carbon. We are a chemical sector company. We have 1.5 million tons of CO2 equivalent emissions every year. So when we say that, we're not saying it because we have none. We're saying it knowing that we are a part of the economy that does emit greenhouse gas, but we believe that society can factor that in and it will still work. So there you go. These are my opening statements.
Thank you very much. Excellent. I've got a lot of questions to come to you, and I was
okay.
particularly interested in the Dutch-British slightly schizophrenic approach that was put there. So I'd love to come back to that. But I want to come to Keith. Now, I suspect that many people in this room feel like we work for Unilever, the amount of time that we present Unilever to other people. So I know that there's good percentage of my own slide decks are actually yours. So for all of us unpaid Unilever employees that there are in this room who are presenting your work, could you maybe give us a team briefing on what's new, what's happened recently? I know you've been on a crowd stage before, so what do we need to know about what's changing and what's going on inside Unilever and purpose right now?
Okay. Well, anyway, good evening, everyone. You talked about the schizophrenic Anglo-Dutch bit. Well, we're an Anglo-Dutch company, so by definition, we have both ends. And indeed, Feike, the CEO of DSM, is on our board, and I do a lot of work with him on our corporate responsibility committee. So I'm Keith Weed. I'm the Chief Marketing and Communications Officer of Unilever. And I suppose I will answer your question. I want to first of all just remind us, though, what you were saying before about, as you start, about purpose, etc., of companies. So we say it right at the top of Unilever. You know, we're a consumer goods company. Hopefully a few of our products are in your cupboards at home. We're a soup to soap company. We're in 190 countries. 2.5 billion people use our products every day. And the reason why I stress that is when we start talking about, you know, social, environmental sustainability and purpose is very important to us because we need to get it right at scale. And I think often we can use examples where companies can achieve something because they have it all perfectly formed and it's small enough to manage. But if you're in 190 countries trying to pull it off, it becomes a little bit more challenging. So we have it right at the top of our business. We say that we want to grow our business, but we want to reduce our environmental footprint and increase positive social impact. And then beneath that, we have a purpose, and that's to make sustainable living commonplace. So we're the largest tea company in the world, the largest ice cream company in the world, the largest soap company in the world. You know, if we don't make sustainable living commonplace, we are going to run out of tea in this world. We're another 2 billion people coming into the planet. So to us, there are lots of different ways of engaging with this, and we've managed to, I think, put together a case that's certainly convinced us, and hopefully to convince others, of the role in growth, and we'll come on to talk about it later. And in fact, the figures that Will talked about in 2015 got better in 2016. So now our sustainable living brands grew 50% faster than the rest of our range and delivered 60% of our growth. So the growth story's there. We have a cost and profit story where we saved over 600 million euros. We have a de-risking the future story as far as committing to getting all our agricultural raw materials sustainable by 2020. And I can go on and talk a bit about that another time. And a reputational story as well. And whether that be a corporate reputation, but to Will's point, is about attracting employees. So there used to be, LinkedIn used to have this thing called most looked up companies. They've stopped doing that now. They've got another metric. I can't think what the metric is now. But you know, number one used to be Google. I can understand that. Number 2 was Apple. Number 4 was Facebook. Number 5 was Microsoft. Number 6 was Amazon. And number 3 was a soup and soap company called Unilever. And every year, over 1 million people apply for jobs at Unilever. So I think there's something about reputation to attract people into your business. And if you look then at our internal surveys of our 160,000 employees, 92% of employees say they're proud to work for Unilever. So I think it starts to show that you can actually create something beyond just, you know, selling more soap within your business. Now, my role within that is, I say I'm Chief Marketing Communications Officer, but within Unilever, that pulls together marketing on one side, but also sustainability. And so I'm responsible for our social and environmental sustainability, and then also communications, internal, external affairs. And I think that joining up is something I think business is going to have to think more about. You can't have marketing in one corner selling more stuff, and then sustainability in another trying to save the world, and this corporate social responsibility over there trying to get a nice story for the annual report. And in fact, one of the first things I did was I closed down our corporate social responsibility department, our CSR department, because I don't think you should have part of the business responsible for doing good to allow the rest of the business to get on and do their normal bad stuff. But actually you need to mainstream sustainability, and it's everyone's responsibility to do that. So when we move now into the subject of purpose, my role luckily enables me to do is change all our brand positioning statements and say, well, actually we're going to have purpose in all our brand positionings, and we're going to put this very much at the core of what we're trying to achieve. And those are what we call the sustainable living brands, brands that have both purpose but also deliver against the Unilever Sustainable Living Plan, which has both environmental and social deliveries as well. So I think it's the joining up bit. It has to be real. It has to be. You have to have a purpose that really works for the brand. Some people say, "Well, hold on. Why do you say that that you have a proportion of your brand sustainable living brands? Surely all your brands should be." Well, the answer is to get to what we've put out as the criteria for sustainable living brands. It's really quite a tough thing to achieve. And I don't think you can just slap purpose onto every brand. They have to be really embedded. The Ben & Jerry's of this world, the Vaselines of this world, who've really got purpose at its core, Dove, etc. And then it's taken us time to work through our portfolio. But as we get more and more momentum, we're getting there. And I'm sure we can explore that in a little bit more detail as we open up the panel and to questions. So
brilliant.
Over to you.
Thank you very much, Keith. And it's great to hear about the 50% growth and 60% of the portfolio, or was it the other way around?
So yes, it's the other way around, but it's fine.
60% growth, 50% of the portfolio. I can update my slides now. Okay. So Justin, first of all, ClearScore, wonderful, wonderful company. I went on today and I didn't actually know that you do the credit score for free, which is outstanding. But the main reason why I know you is that in Mousse, I think you have the best advertising asset that there is out there at the moment. Everybody loves Mousse. So tell us a little bit about ClearScore, and perhaps as a CEO and a co-founder, as an entrepreneur, around how difficult and easy is it to negotiate purpose when you're building a business?
Okay, great. It's great to be here. I mean, I'm sort of honoured to be on the stage with much bigger companies. We're at the other end of the spectrum. One, we've got no Dutch interest whatsoever. we're just a British company. But we're right at the other end of the spectrum. So I set the company up in September 2014, and we launched in July 2015. So we're a couple of years into our sort of journey, and the company's doing really, really well. And one of the, I think, advantages that we have is we've built it from purpose. And why we did that was in my career, so I started my career with Procter & Gamble, actually, and so learned a lot about consumer goods back in the day, and obviously P&G have the purpose of improving the lives of the world's consumers, and that's a big part of Procter & Gamble, and I've watched Unilever over the last sort of 20 years really do an amazing job, and so congratulations to everything that you've done, because I think it is absolutely extraordinary. And so, as I sort of thought about it, and then I went into banking. I set up my first company in the sort of around the .com, and then I lost some money with that company. All good entrepreneurs fail at least once or twice. I've done a lot of that. And then so I needed to make some money, so I went into banking, and so I spent 4 years working for Deutsche Bank. And Deutsche Bank is a very interesting company, because if you look at Germany, for example, it's actually a very sort of purpose-led company. And then you look at London with all the trading and all the things that you talk about around, investment banking and equity trading and things like that. And it's maybe the purpose is just about profitability, and it's just about making money. And so I sort of left there, and then I went to a company called Capital One, who are a credit card company. And that, if you're a purpose-led person, and sort of purpose is a way that you get motivation, was quite an interesting experience for me, because what I was doing was basically selling credit cards, about 1 million credit cards a year I used to sell. And we used to have an interest rate of 39.9, so we were subprime or near prime as it's called now. And we used to beat ourselves up all the time about it, right? Because we felt like we were a purpose-led company, but we were lending money to people who, you know, the Daily Mail would have you believe shouldn't be lent money to. And so we thought a lot about that, and actually it was really at the sharp end of, you know, how do we feel about that, and is that the right thing to do, and how do we actually keep purpose within that? And we sort of justified it, and then of course and one of the ways that we justified it was that we knew that people, a lot of near prime customers are essentially price independent. And so we had a cap at 39.9, and then of course companies like Wonga and the short-term high-cost lenders came in and proved that you could lend at 2,000% and people would sign up, right? And so, you know, it's something to wrestle with, I think. And as I've come into entrepreneurism with ClearScore, really trying to create lenses by which we can make decisions and build a company which I think is fundamentally healthy is what we're really trying to do. To pick up your points, we've just gone through or are going through the process of changing our articles because we want to become B Corp certified. We're going through that process. So I've just come off a pretty tense board meeting about 2 weeks ago where we had a conversation about this, right? And I'm a venture-backed company. We have VCs around the table and they have a return profile and they know that we probably need to raise some money next year. And so if we change our articles to not be shareholders but actually be stakeholders, which I'm glad to say was approved, but it wasn't an easy discussion, right? Because they're thinking with their pocket, they're thinking with return, they're thinking about who's going to exit the company, who's going to buy it, et cetera, et cetera. And so it was a really tense conversation, but actually when we stripped it all back, ultimately for me, and the argument that I used with the board was that came from a book that I wrote when I came out of Capital One. So I wrote a book called Why Should Anyone Buy From You? It was so successful that it almost immediately went out of print. So you'll be relieved. You can't buy it in print. You can buy it on Kindle. So if you go into Amazon, you'll see it there. But really the focus of that was I wrote it at a time when financial services especially had come through a very, very bad time and nobody trusted banks. And so everybody was talking about brand trust and how do you become trusted and this sort of thing. And I became very fascinated in it. And when I came out of Capital One, I had like 6 months where I was sort of didn't have anything to do. So I thought I'd write this book. And actually for me, purpose is a very effective way to create trust with customers, right? Because in a world where it is increasingly easy for customers to lift the veil and see what's going on. And to Keith's point, you know, if you have sort of misalignment where, you know, one bit of the business is doing this and the CSRB people are doing this and the marketing people are doing this, you know, increasingly it's very easy with social media and transparency for customers to lift the lid on that. And so how do you align around that? And I think the way you align is that you have something which is truly motivating to large amount or small or large amounts of people. And if you do that, what happens is you start to get a sort of natural alignment around business decisions, because that for me is really, you know, when your purpose is working, when actually the day-to-day decisions that are made, you know, not at the board level, but actually in the day-to-day, you know, the millions of decisions that are made in Unilever every day, the hundreds of decisions that are made in my company are actually aligned with that purpose. And I see that growing in my company, and I think the more you can do that, the more that you fast track to trust, and people can judge you more fairly, people can understand where you're coming from, and that allows them to trust you more, and the more trust you have, the more they're going to commit to you and hopefully use your products and buy your products and feel good about that.
Brilliant, thank you. When we went through our B Corp journey, we were told it would take 24 hours. It took 2 months. And we felt pretty good about that. So I'm so pleased to hear that your investors have agreed. But Geraldine, investors don't often agree. And we're here sitting talking about corporate purpose and brand purpose. And what you raised was the fact of, does the market give a damn about any of this? Is it put up with, as well, it might have some advantages? Is it a negative? Is it seen as a weakness? Is it seen as, especially in the City of London, is it seen as an advantage? And especially in this world of sort of impatient capital, with this demand for quarterly or even monthly returns versus what I guess we would hope for, which would be slightly more patient investment. How do you negotiate that between your organisation's purpose and what your investors want?
Well, that's the usual debate, and you phrased it very well. So, where to start? I think I would start with the individuals. I think it's something that purpose is becoming something that everybody actually aspires to in some shape or form. And what's very interesting is that when I talk to portfolio managers and they say, oh, you're doing this, etc., you could see that there's a personal interest in what we're doing. The problem is that they have their responsibilities, which is that they get benchmarked against indices of returns on portfolios, etc. And the system is actually designed that there is very little freedom. And I think one of the most important action that is starting to happen and needs to happen more is that there is more discussing together how can we readjust the system so that there is space for that conversation. Because I truly believe that there's a desire to make the space for it. Yeah. It's just not embedded in the way that fiduciary duties are defined, the way that performance is benchmarked. So basically, if you have a portfolio, you have to meet this and this Morningstar index, etc. And that makes it a virtual impossibility to create that area. So what actually happens today, and I'll take my example as one, is that when you're on roadshow, you talk about financials and you talk about quarterly, etc. And a little bit here and there, one sort of throws in a bit of innovation. Yeah. It says, cynical is saying basically when the numbers are fine, they will start listening to innovation and future developments. If the numbers in any quarter are not where they should be, you might as well not bring it at the table. Now, of course, when you are on the managing board of a corporation with 10 billion turnover, etc., you don't actually zigzag like that. You have to have a much more long-term, systematic way of building your culture, attracting the right people, making the right decisions. So it's a little bit modulating what do you mention when at present. Having said that, there are some very important initiatives going on. So I don't know if you've heard about Focusing Capital on the Long Term, which is a group of very much institutional shareholders, very US focused, which is great because we really need the US to move on this, that are really looking at, okay, how can they start making space for a conversation about longer term? And as soon as you talk long term, you start talking values. I mean, it really goes hand in hand. So I would say that's one of the things, and clearly the work that's been done by the task force, the Financial Stability Board, by asking a very smart question, because in the asset world, risk management is very well known. And there's no compromise on managing risk and compliance. And a lot of effort is being put there, etc. So when you start asking the question of purpose and sustainability from a risk angle, they can't afford to not answer. So it's creating a discussion where I don't actually mind if it comes through the risk route, but if it creates the right questions of what are you doing about facing a world where climate is going to be a disaster, and how do you mitigate those risks? How do you face the risk of a world that actually is going to react quick enough and is going to transition, and you have all the risks about transition? And the fact that all corporates would have to answer just those two sets of questions automatically makes those that have considered them well up front pop up at the surface of saying, yeah, we can answer those. By the way, we could have told you 10 years ago. And that is, so to me, it's heading in the right direction.
So that sounds like there's a change underway. A few years ago, I asked Ian Cheshire how often he was asked about purpose and sustainability at Roadshow, as opposed to offered. And he answered, it's never happened. So as a percentage of roadshows, or has it ever happened, or as a percentage of roadshows, how often do you get, it sounds like you raise it, but how often do you get asked about purpose or sustainability at Roadshow?
Okay. The first time I got asked, what does a 2-degree world mean for you, was in Tokyo last autumn.
Okay.
So it's quite recent, but at least it was asked, and we were with the IR head sort of, thank goodness it got asked. So that was great. Unfortunately, it's not generally part of the conversation.
Okay.
I have to be honest.
Unless
at
you
this
bring
stage.
it.
Unless we bring it,
Yeah.
and then we usually cover I would say the usual topics, the margin evolution, the growth, etc. And then once everybody's happy with that, the question says, oh, so what's next in the future of DSM? And then we start throwing in Clean Cow and Green Ocean and all sorts of interesting projects where I would say the interest can be there, but it's very much as a second thought right now.
Yeah, right. Thank you. Although it was very encouraging to hear that it is beginning to be asked because it didn't used to be.
And by the most important players. So when you have the biggest institutional shareholders actually waking up, and the insurance industry is actually critical at this stage.
Yeah.
It's become obvious now that climate change is leading to more catastrophic events.
Yeah.
Therefore, their liabilities are, and they're very good at actuarial projections and all that, so zoof, off it goes.
Yeah.
And yet, the investments are not supporting corporates that can actually bring the technologies to help transition to a low-carbon economy, to help for a non-fossil world, to do all those things. And therefore, they are starting to realize that it's a little bit a split personality, and that's helping a lot.
Brilliant, thank you. Keith, let me take a slightly different tactic because you talked about the brands which are really beginning to build in purpose. And I think if I opened my cupboards at home, you're right, there would be a great proportion of Unilever brands in there. But I'm not sure which ones are your purpose leaders and which ones are your long tail. So on that long tail of the brands that aren't there yet, how far is purpose optional versus obligatory? And what are you going to do about the ones that don't quite get there?
Well, they'll either get there or they won't be part of Unilever. So I don't know if you know a brand called Pepperami. Who's a Pepperami user here? Well, there's a couple out there. Well, at least the ones
We're all
who are
vegetarians
willing
and
to,
vegans.
willing to admit in front of everyone else you're Pepperami. But that's a good example. I mean, a very tasty lump of fat and gristle. There was no way that was going to fit into our nutritional program within Unilever. So we sold Pepperami.
Right.
So I think all our brands are working on this area. But by the way, this is not a new thing for Unilever. So although I said our purpose is to make sustainable living commonplace, it's stolen from the language of Lord Leverhulme back in the late 1800s, where he said he wanted to make cleanliness commonplace. At the time, Victorian England was a pretty dirty place, and the slums here were every bit as bad as the slums in Mumbai today. And he wanted to bring cleanliness to the masses. And he launched one of the first brands in the world, as in a brand name. So up until that point, most brands were named after their founders, so a Ford or a Hoover, and he launched a brand called Sunlight Soap, and the idea was to bring sunlight to the masses and make cleanliness commonplace. But he was a hard-nosed businessman. He built the largest private port in the world up in Port Sunlight and started shipping Sunlight soap around the world, and so we arrived in India in the late 1800s and similarly around the world. And he was a very purpose-driven. I mean, he didn't actually, come to think of it, we didn't have then management consultants explaining missions and purposes, whatever, but he had a purpose statement in the late 1800s, so he was quite an innovator in this way. And he drove a business, but drove a business around sort of a social entrepreneur as opposed to just a businessman. And I suppose we're seeing that through on a much broader scale right now. And I would agree with the comments you were making, but I always find this quite surprising where people often say, what is the business case for sustainability? And I always answer, I'd love to see the business case for the alternative. What is the business case for destroying the very planet we live in? What's the business case for destroying the very societies that we serve? And I think that actually all we're talking about here is better run businesses. And if we haven't really made the case that this is a better way to run business, then I can equally argue then why should our shareholders tolerate an experiment in this area? Now, I believe we have proven it. Since I've been doing this job, our share price has doubled. And we're not a tech stock, we're Super Soap, and our share price has doubled. So every bit about delivering short-term performance. I don't think short-term performance is a bad thing. Long-term performance is made up of lots of short-term performances. But I think you need to look at both horizons. And if you can really develop brands that can stand on their own 2 feet, and deliver results today and tomorrow, then that's what we should be striving for. And I think increasingly now within Unilever, and it certainly wasn't true when I first started this role 7 years ago. There was a lot of belief then. But I think we now have evidence to say this does make a difference. And you're completely right. The internet's part of the reason, because I think before you couldn't really find out whether PG Tips and Ben & Jerry's and Persil and Domestos was made by the same company, but now it's really easy to find out. And of course, people can then find the story behind the brands, and you'll get found out if you start speaking out of both sides of your mouth. So I think there's much more necessity for companies to be more transparent and be held to account. And our belief is if we can get ahead of that and sort of get to the future first, then when we're all buying, hopefully we'll see the little Unilever you and you think, well, yeah, they've tried a little bit harder than the alternative, and so, all things given, I will go with them rather than the alternative. The only thing I would stress, though, is I think certainly in consumer goods, sustainable brands, environmental, social, sustainable brands, got off to a really bad name. They tended to be more expensive than the mass market players and worked less well. So why would you want to pay something more? And so our principle was very, very clear. No, we want the brand leaders, Persil washing powder. We want the brand leaders to have the best credentials in social and environmental sustainability and be mass market price. So why should a consumer pay more for companies doing their job properly? And we should have it as a mass market approach where all good brands are sustainable brands.
Well, let me follow up on that a little bit, because I just had to check my notes. The Value of Values report says that we have an untapped market of 1 trillion. Really 1 trillion? 1 trillion. Could you tell us a little bit about that? Because you talked about the risk of not doing this, but the opportunity of doing it, the untapped opportunity. So tell us a little bit about that report and that 1 trillion number. And also, what do you think it's going to take for the brands in this room to win out in that kind of rush to the 1 trillion?
So we did a bit of research. Again, it's all part of trying to develop our understanding, but also to the point of making the case for we're doing the right sort of thing. So we did this bit of research. We're one of the largest commissioners of market research in the world. To be a successful consumer goods business, you have to know what your consumers are doing and what they aspire to do and what's going on in the world. And so we did something particularly just around this whole area. And we interviewed 20,000 people across multiple of countries, developed world countries, developing world countries around this area. And what we found is that already a third of people were buying products considering the whole area of social and environmental sustainability. So a third were already doing that. And by the way, this is not claiming. So the whole sort of say-do gap, where people say I'm going to do this, but actually going to do something else. We actually tracked this through Nielsen to actually purchase. So we were actually charting what people were saying and then actually checking they were actually doing it. So about a third of people were already in this area. But I think interestingly, another 20% of people said they would if they could. And what was getting in their way was actually that point I was saying before, was having to pay a premium for something, or the product didn't work as well as the sort of brand leading alternative. So I think if we can provide social and environmentally sustainable products at parity price but at top performance, we'll unlock the other, and that's half the market. And also interesting, again, might be against what some of us might think, the developing markets had an even higher. Actually, the UK was lower than most markets.
That's interesting.
And I think the reason is if you're in one of the developing markets, you see the negative impact of poor sustainability around you. Yeah. We flush a toilet and the waste disappears. 2.5 billion people in the world do not have access to good sanitation. 1 billion people in the world still openly defecate, just literally walk out into outside and go to the toilet. And so when you're in a world where you actually see the negative impacts all around you, I suppose you're a little bit more sensitized to it. And so the trillion calculation was really looking at the opportunities out there if you really embrace it. Now, you can say, is it X billion. Well, it's a big number. Let's not debate about what the actual number is, but it's a really big number if we can unlock it. And if you believe, as in companies like DSM do, that actually the writing is on the wall, because if you just track what we're doing right now, and then throw in the multiplier effect of another 2 billion people joining us, we are going to hit into these problems. So surely, what makes a good business a great business? You don't want a great business. A great business anticipates the future, has a point of view on the future, and gets to the future first, ahead of their competitors. So if we all know this is going to happen, why wouldn't we be developing now the muscles in our business to get there first? Because as and when the world starts tipping to saying, oh my God, these are really important issues, I'd prefer them to say, and Unilever has the solution, rather than, and, oh, now who do I choose now?
Yeah.
And so I'd encourage everyone to say, look, it's absolutely clear this is going to happen. There are lots of really clear trends. The fact that only but a couple of years ago, for the first time in mankind, we have more people living in towns than we do in the countryside. Well, that's a major shift. Because what does that mean? Well, we're packing people in more. And if you're packing people in more, that has whole impacts on how people live and sanitation and food, etc. So just keep tracking those forward and you can start painting the future. We do a huge amount of work on trends, looking at the future to guide our strategy. And I tell you what, you don't have to be that clever to predict some of these things are going to happen. So if you can see it's happening, why wouldn't you grab it? If I told you now, I would take you back 10 years and you can choose to buy stock in Google, Facebook and Amazon, would you?
Yeah.
I think you probably would. So looking now, look forward, what's going on ahead in the future, and there's going to be a big impact in this area. Why wouldn't you lean into it?
We might need to unleash you on some of the investors that that Geraldine has to present to. Justin, let me come to you because
Unilever already does.
Already does.
Very, very much so.
Let me ask you about being a CEO. And there's so many philosophies of how you bring about purposeful change. Has to happen from the top, must engage the bottom. You need to build it in right from the start to actually know you can be a born-again, purposeful company. How are you negotiating that as a CEO? How important do you think it is for you to lead on purpose versus actually building it into the structure and architecture of the business?
It's both. So, I mean, we're lucky. I'm a founder of the company, right? And so we're a founder-led business. And, 2.5 years ago, it was a PowerPoint deck. And now 4.8 million customers, and we're growing really, really fast. So we have the advantage of being founder-led, and so I stand up in front of the team, and we're lucky. We've got 120 people, so we're still small enough where I can, about half the room, I can actually still talk to them, right, and communicate what we want to do, and that definitely helps. But to answer your question that you posed before, I mean, I get asked about not so much purpose, but what are you here to do all the time? Yeah. That is the primary question that I'm asked, because we have very little background of data, right? So, I don't have performance and quarterly performance, and I have some of that, but I don't have, everything's ahead of us, right? And so I get asked all the time by potential investors, by potential employees, by potential partners, so what are you here to do? What do you want to do? How do you want to change the world? And we're living in an amazing environment, especially in London, where there is just so much entrepreneurism now and so many people setting up new companies. And you do compete on what is your vision and where do you want to go. And I think investors see it as painting the future of, do they believe that we're moving towards a space that actually is going to be a profitable space in the future? But they also see it as a risk mitigant. So to your point around, if you look at, consumers do switch, right? And so look at Uber, right? You've already started to see people moving in the US to Lyft because of all the issues that Uber have, right? And all the corporate reputational damage that they've had and all these sort of things. And so consumers do switch their allegiance. So being founder-led is really important, but we have put in the systems and I was lucky enough because of Procter & Gamble and Capital One and good companies that trained me, that, from almost day one, we laid out a set of what we call principles. We don't say values, but principles that we run the business by. And we have 8 of those, and we deliberately tried to make them as differentiating as possible. So we use different language. You know, we talk about we obsess and we fight, you know, these sort of things. And so trying to, because I didn't want to recreate the same thing that maybe I'd seen at Deutsche Bank, where it's like on the wall and it was like customer focus, innovation, teamwork, value. I mean, you know, everybody's got these values, right? So we wanted to put a bit of differentiation into that. And so we've had that literally, I set the company up September and we sort of rolled them out sort of middle of the year. So whilst we're also creating a product and creating a business and trying to get that into market and raise money, we're also thinking about, okay, what is the framework? What is the structure that we can build this company on? And one of the things I think we've done really well is we've learned appropriately from bigger companies about how you can bring that structure in so that you can scale it very quickly. So when we recruit people, we look at those principles and we look at how they match versus our vision. We show them the purpose of the company and we say, how do you feel about that? And we get them to actually give a sense for, they need to think about it beforehand. And one of us at the senior team will have a conversation about, well, does that motivate you? Is that something that you want to do? Because we operate in an environment where, you know, especially for young developers and things like that, they can do whatever they like. They can walk into any sort of job, in fintech, in, you know, any sort of market, right? They're so highly prized. And so part of our recruitment process with them is this the place where you are going to feel great about what you do, about the impact that you're having on the world and what we're trying to do together. And if you can get that right, you will fulfill your potential within ClearScore, and collectively we will fulfill the potential of this purpose that we're trying to do. And so those frameworks, I think, have become critical over the last year as we've gone from you know, this time last year we were about 25 people and now we're 125 people. So we're recruiting 20 people a month, which for a company like us is like is so demanding. And actually we put our money where our mouth is, so in the sense of we actually exit 10 to 15% at the end of probation. So we have a 12-week probation period. And so our testing and our recruitment processes bring people in, and very rarely can they not do the job. But about 10% of the time, there won't be a fit. They will have misjudged something, we will have misjudged something, you know, they actually don't feel like a real fit within our purpose and our principles and our culture. And at that point, we'll ask them to leave. And that often, you know, when I say that to people, they go, you know, probation is like, I mean, we're very clear up front, right, that this could happen, and it does put some people off. But it's so important to me that we have a bunch of people that really believe in what we're trying to do. And if I can get that and minimize the amount of passengers on the journey, and when I've worked in big companies, you know, however much you try and however much the values and the purpose are there, you always end up with a certain amount of passengers. And being able to minimize that, especially at our very small level, is critically important, I think. So we've had both the vision, the purpose from the early days. That's easy because we're a founder-led business, but we've also learned from bigger companies to put frameworks and structures in place that allow us to scale it.
I've got one final question for you, and then I'm going to open it to the audience. You were just talking there about engaging with your staff very powerfully on your purpose. Yeah. Quite strongly, that you're in and you're out. What about with your consumers? How important is it to tell them? Are we going to hear Moose talking about purpose?
Does everybody know who Moose is?
Yes.
I've already seen so does anyone know who Moose is? No? Okay, good.
You need to watch more telly.
At 11 o'clock in the morning on Sky. So well done, you're all productive people, you're not watching TV during the day. Excellent, excellent. So next time you're at home bunking off, turn your TV onto Sky TV and you'll watch and you'll see our adverts, and we have these dogs in it, and our most famous dog is Moose, right? And so you can look at it on YouTube. Are we going to have Moose talking about purpose? I don't think we'll do that, but I think having a conversation about what we're here to do. So what ClearScore does is it basically gives you access to your credit report and score for free, which now is fairly common in the market, but when we launched a couple of years ago, it wasn't. And so the big players in the market, Experian is the biggest that you might have heard of, they've had to go free because of us. And the company is founded on a belief, my belief, that, you know, you shouldn't be charged to see your own data. It's all our data, and the banks are sharing it, and they're making judgments over whether you get credit or whether you get access to products, which for most of us sitting in this room probably isn't an issue. But 50% of all credit applications in the UK either get rejected or they get downsold. Okay, you go up to the north of England, Scotland, and millions and millions of people are misjudging credit, and it hurts their credit, and it excludes them from the financial landscape. So my belief has always been that you should have access to that data, and it should be free, and it should be easy to do, and that's the fundamental belief of the company. And so we do talk about that, and we talk about that in video. I talk about that. Now, is it? If you go to our homepage, it says your credit score and report should be free. Now it is free forever from ClearScore. So actually that is a sort of copywritten version of what I've just said. Do I go into hours and hours of explanation about data and data rights? I don't, right? Yeah. It's just trying to boil it down into something that actually motivates the customer, but actually reinforces your primary purpose as a business and a brand. And when you get that right, I think good things happen.
Brilliant. Thank you so much.